And thank you guys for joining us today. Today, we're going to be talking about the future of Web3. And to kick that off, let's go meet our panelists. If I could ask each one to turn on their video and their microphone. First up is Dr. Alan Meek. Alan, can you tell us more about yourself and your firm?
I sure can, Hall. How's the audio? So me, not much to me. I've got a lot of background in the leadership positions in the C-suite, government, and industry, particularly tech industry. Background in national security and tech. A passion is strong in many techs, but full disclosure, Hall and folks, my Web3 expertise is more from interactions with other experts deep in the space than with startups vying for funding in this space. More relevant for today is the organization that three of us founded, the MIT Alumni Angels of DC. We span the mid-Atlantic region of the US. We're about 125 angels, all MIT grads and accredited investors. And then we also federate with the 5 other MIT angel groups spanning New York, Boston, Cambridge, Northern California, and UK, totaling 1,000 investors. Our strength is our distributed expertise in diverse and deep tech, as well as connections in the relevant market space. This informs our due diligence, resulting in better investment decisions. And these two differentiators also benefit our portfolio firms because our angels contribute more than the funds. We bring tech insight and market connections. So thanks for the opportunity to be here. I'm really excited to hear my fellow panelists and also hear the pitches that follow. Back to you.
Thank you. Thank you, Alan. Next up is Robert Wilson. Robert, can you tell us more about yourself and your fund?
Hi, everybody. Yeah, I've been investing in public markets for about 12 years now, a little bit maybe younger than some of the other people on the panel and joining us today. But I started using Bitcoin in 2016, and that experience actually opened the door for me to crypto and Web3. Once I went down the rabbit hole, obviously didn't look back, and so spent a lot of time in the space. So I joined today as a Web3 and crypto angel investor. I got more involved as my investments evolved the private equity side of things. I was investing into the Web3 infrastructure companies. So the exchanges that we know today, Coinbase, Robinhood, some DeFi protocols like Abra. So these were all kind of small microcap companies at the time that are now, multi-billion-dollar conglomerates. And today I seek investment opportunities where I see problems that need to be solved within the space. So I guess we'll talk about more about that today.
Great, thanks. And finally, we have Andrew Romans of 7BC. Andrew, can you tell us more about yourself and your fund?
Sure. Hello, great to see you. So I started off as an entrepreneur in the 90s and founded a number of venture-backed startups, raised over $300 million of VC funding. So I know a lot of VCs going back into the 90s, managed a nuclear winter of the dot-com crash. And then I started the Founders Club, which was an equity exchange fund where VC-backed founders could swap equity via limited partnerships, essentially get diversified and become investors in each other. And then that became the basis for my first venture capital fund, which began investing in 2014. And I'm now investing out of our third VC fund. Typically, VCs are happy to be making a 3x, 5x return. Our funds have been making more of 12, 15x returns. So we've performed well, and we tend to like to have value-added angels like these MIT folks getting involved in our companies. I've also written a couple of books, and I taught a class on venture capital at Chapman University. And my third book is called Masters of Blockchain, and interviewed kind of a lot of the early pioneers of the industry. So we do know a lot about, blockchain and digitizing things and what people are calling Web3. I'll stop there.
Great, thanks. Well, that brings up a good point. Let's talk about what we mean by Web3. We hear the term almost everywhere in all situations, but let's define that a little bit more clearly. Robert, can you lead that off and tell us what is a good definition of Web3?
Well, I think to totally understand Web3, we'd have to digress back a little bit to Web 1, right? And what we know today is the internet, which was ultimately just a transfer of information, browser searches, emails, right? Web 2 evolved into, a more user-friendly experience application layer, right? So that the Facebooks and Twitters, maybe LinkedIn's of the world. And that's what got us to Web3. So it kind of started with Bitcoin, right? And the peer-to-peer transfer of value, and a vision for a decentralized version of the internet, where your data is not managed by large companies profiting off you, offering you a free service, but you are the product ultimately, by sacrificing your data, right? Today, we use many protocols on Web3, such as DeFi, but I believe that the promise of Web3 technologies has yet to be realized. So, a lot of people stumble upon this space and think, I'm so late, it's so complicated, I don't know, where to start. A lot of white noise, but we are still very much early, and probably in the second and third inning of things. So I think that's where we are. We have a long way to go, and it's quite an amazing and exciting space, right? But I'll stop there.
Great, thanks. And Alan, what's your definition of Web3, or what do you see as unique about it?
Well, like a contrast, the same as Robert, don't confuse it with Web 3.0. And you hear a lot of folks conflate the two, the semantic web, right, machine to machine. So this is really a focus at decentralized, like Robert said, and user-centric. Because it's powered by blockchain, it inherits both the features and the constraints of blockchain. And I think that we're seeing in Web 3.0 as well. The last session you all had was on fintech, and blockchain came up, and that came up in the discussion. I heard a lot of parallels on that. So my last thought is, the term Web3, was coined, 8 years ago by Gavin, right? So Ethereum. And the interesting irony today is that token trading is being centralized in a few platforms, right? Think Coinbase instead of decentralized peer-to-peer. So maybe that's a preview of my thoughts on the challenges of Web 3.0, of Web3.
Great. And Andrew, what would you like to add to that discussion?
Well, in an attempt to be entertaining or at least very cynical, I could say that as an experienced entrepreneur and founder, Web3 means a startup with no product, no revenues, seeking to raise a large amount of capital at a valuation that makes absolutely no sense for a professional investor, unless you're seeking to be part of a pump and dump scheme. To be more serious about why I pay attention to it, I think that the idea of transactions, whether it's me selling a book in Japan through a publisher in Japan, who's supposedly wiring money to my publisher in New York, McGraw-Hill, and me getting the amount paid to me tied to what actually happened, if we can API book sales from, say, Amazon.jp or Barnes and Nobles, whatever bookstores they buy my books in Japan, and make sure that it's impossible for the Japanese publisher to lie to the New York publisher, and impossible for the New York publisher to lie to me, the author of the book, that's a massive leap forward for humanity. And so if we can begin to kind of accept the notion that, your grandma said, get it in writing. If you have an agreement, if Hall and I have a financial agreement, let's get it in writing. The next level is, well, why is this agreement not on a blockchain and forcing me to trust you as your word is your bond as an Englishman nonsense? It should just be impossible for free will to get in the way of the truth. So I think if you can begin to embed crypto payments and distributed ledger where no one person can centralize a ledger and cook the books, kind of, as it were, south of Rome accounting, that's a massive leap forward. But it'd be nice to see honest entrepreneurs attracted to the sector go through milestones of financing raise appropriate amounts of funding, make something people want, and actually generate sales and value, as opposed to a let's rush the public for venture financing and have a crypto token free-for-all.
Great, thanks. So my next question to each of you is, what is the main trend in Web3 today? We've talked about a lot of different things here, but what do you think is the overarching trend that you're seeing out there? Robert, let's start with you.
Yeah, I guess to look at the trends right now, best way to do it would be look at the the cold hard data and the numbers. So what blockchains or dApps are generating revenue, or where are people spending money right now? And first you have to look at Ethereum, because it's number one. They're creating 100 million in revenue every 30 days. So if you think about that, that's people that are using the blockchain, right? And so there's a lot of demand on Ethereum right now. The OpenSea marketplace, the NFT OpenSea marketplace there is generating 100 million in revenue every 30 days. So it proves to show that, I guess, contrary to what people want to believe, there still is a demand for NFTs. I think it's a lot of speculation. But OpenSea itself is generating over 30 million per month. Uniswap, which is also built on Ethereum, it's a true DeFi protocol. They're generating a little over 30 million a month. And then you have Lido Finance, which is an Ethereum staking service, and they're generating, I think, just shy of 30 a month. So you can see right now, Ethereum is kind of the epicenter of Web3. It truly is, a real world example. It'd be the Manhattan of Web3 right now. And all that for context, like Bitcoin is generating $7 million a month. So ETH and the ETH ecosystem really is outperforming everything. But the past doesn't equal the future, right? That doesn't mean that that's going to be the trend moving forward, right? So that's kind of what's happening right now. But it'll be interesting to see where things change, because we sure know they will, and what may be the next trend.
Great. And Andrew, what do you see as the main trend in Web3 from where you're standing?
Well, we're not speculators that would just buy Bitcoin and Ethereum with our LP capital from the funds we've raised. We dabble in that, thank God, as individuals, but we're really company builders. So examples of what I suppose you could put a little pink bow on the forehead and say this is Web3 would be DigiShares. So DigiShares, I've known Klaus for over 18 years, the founder of DigiShares. So we know each other, trust each other. I invested in one of his previous companies a long time ago from the Founders Club, and they're just digitizing real estate assets. So the way real estate people raise capital, the way they manage their back office, the way they manage trust within it to be ethical and accurate. And it's basically issuance and then a secondary trading market on a focused industry that, if nothing else, is lowering costs by digitizing human workflows and then connecting into data sets. So maybe I view the natural evolution of humankind as we want to digitize more human workflows and tap into more data sets. Even like Moneyball wins the World Series, maybe digitizing and tapping into data sets could make insurance lower cost, higher quality, better, higher profit margins, So we feel very comfortable backing Klaus Scanning and DigiShares, which the name kind of says what we think it's doing. It's digitizing shares and tokenizing ownership in a bottomless pit, large addressable market of real estate and adding liquidity to it. Another one is Fanvestor. If you look at even back to like Bowie bonds, if you ever heard of this, like David Bowie sold 10 years of his entire library of royalties, of income streams, he amazingly timed it like the week before Napster came out, right? And then by the time that people were back onto paying for streaming, it reverted back to his family office. So he managed to get like 300 million of upfront cash for 10 years of revenue streams. Fanvestor turns the fan for a musician or an athlete into an investor, where there's a whole lot of innovative things. Imagine the Grateful Dead. Would they want Sony as their record label when they could have the Deadheads, their fans, pay for the next 5 albums, get smart contracts on everything, generate merchandise, and create an entire Disney flywheel around the Grateful Dead? That's clearly the way you want to go. So Fanvestor is using blockchain, and they're fully regulated. When I see a lot of the NFT emails hit my inbox, these people obviously were never supervised by FINRA or understand the rules and statutes that they're breaking of what they're saying, or the culture of the fire emoji. I guarantee you'll make a 10x return statements that are in their subject emails. Fanvestor is 100% made their own broker dealer. Everything they do is in compliance with US law. And when they operate outside the US, they know that. So those are 2 examples of what we thought were very smart founders to invest in. I also funded Michael Golub's brother's company about 10 years ago. And so I've known him and his parents and his wife and his kids. So we thought this guy is a perfect entrepreneur to take on this business.
Great, thanks. And Alan, what's your take on the main trend in Web3 today?
Well, maybe I'll take on Andrew and try to be the cynic for this one. So pass the baton. I would say slow adoption, sort of chicken and egg. It's really hard for startups to tackle and disrupt using a decentralized approach to compete with established platforms. Look at Bezos and the flywheel, right? So in getting mass, so where do you put the money to get that mass? And then also, how do you monetize it? So what I'm seeing is most likely success will be in areas, not the trends I'm seeing, and not dominated by legacy systems. So, Andrew's examples, he gave 2 examples. I think those are good ones, that legacy platforms are not dominating. And another one that you didn't mention was things like supply chain validation. It's becoming more important, be it food or be it electronics, right? Commercial and national security. And then finally, I agree with Robert. As this moves from this trough of disillusionment, right, and starts going up, then something we're seeing play in things that do plumbing for Web3. Not just Ethereum that everyone knows, but other more niche plays for the platforms for plumbing. So that's where I see in the trends. Don't take on something that's already working. You're not likely to disrupt it, but go in areas that aren't served, and then look at infrastructure that supports it.
Well, great. Well, there's some new structures coming out, such as the distributed autonomous organization. We're discussing moving from individual companies to more of a network or ecosystem in one entity, and then everyone's incentivized with tokens, and that's a form of Web3. Let's talk about that a little bit. Robert, what's your take on distributed autonomous organizations? Where do you think that's going?
Yeah, so DAO, growing in popularity, and I think it's a great idea. It's created around digital or real world assets, right? So you can build the DAO around, for example, I've seen around a Bored Ape, right? It may be a group of people that would all like to own a Bored Ape but can't afford one, so they can own a fraction of one under the organization of a DAO, right? Or maybe it's a Picasso. I've even seen silly examples like a Lamborghini, where they put it under the organization of a DAO, and they own a portion of that car. Tokenize that asset so that everyone can own a share of it, or a stake. A stake, so everyone gets a seat at the table of the asset, similar to on a board, right? And the more percentage you own of that asset, you have a larger seat, per se, or more seats. I haven't spent a lot of time within the world of DAOs and, maybe researching, where I'd like to be a part of it. But, it doesn't maybe overexcite me as an investor because of the fact that, it's just an organization that's built around an asset, right? So, I think that we're still scratching the surface for the use case of DAOs, but personally, not overly excited as an investor in that space right now.
Okay, great. Andrew, what's your take on DAOs? Where do you think they are, and where do you think they're going to go?
Well, I think all of this stuff is kind of born out of open source software, so anyone can download Bitcoin and start mining Bitcoin, and it has this kind of legacy of anarchy and F the police kind of vibe to it. But I think what's interesting is it's really capital formation. So what is how for the last many years has capital formation happened? How do I form a venture capital fund and raise capital, and MIT people become investors in it? That, and then these guys like really quickly created a DAO and tried to buy the US Constitution, type of stuff. I think that's fascinating, and it's almost like a crowdfunding thing to watch. Where we've seen and had deep conversations about DAOs is more of, if we start a company with real founders and equity and governance with even a board of directors of that company, can we use DAO as a capital formation to work within an open source community and provide incentives to drive behavior that we want to see? So if you look at historically, companies were doing token offerings, and instead of raising money from VCs and paying engineers to do development work, they were basically airdropping or gifting or paying someone in the token and motivating that engineer to translate this white paper into 20 languages or whatever they were doing. So you start to see that the DAOs tie into how to motivate people to do some form of behavior you'd like to see them do. And I think that's interesting. And so we see it as potential phase 2, phase 3 for some of our classic equity investments, that we would own some of the interest of the DAO. And it could be kind of like an equity kicker to drive motivation we want, create a community that you want, decentralize various players that were not adding enough value to justify the tax they were taking or the rent they were taking out. So I think there's some interesting positives that we're going to see there.
Great. And Alan, what do you think we'll see in DAOs coming up?
Well, so DAOs, just like other blockchains, right, eliminates the need for a mutual trusted third party to collect, validate, record all those aspects, the life cycle of the transaction using smart contracts. So I think it's good for asset sharing, as Robert mentioned. But, Robert, I appreciate your skepticism because paper can do that. Neither one of us saw much of a use case for the decision facilitation of DAO for a shared asset, right? Andrew, you mentioned it, as an incentive, but you're right, it's really a payment system with a smart contract for validation of the deliverable. So I see DAO as best for obtaining formal decisions or validating compliance and completion. Okay, so think of it as kind of the validation, right? Recording compliance for those that work in the compliance. I do see it helping with that. I mean, in supply chain is kind of a compliance thing too, right? But really poor for an organization without central leadership for decision making and collaboration. Okay, so I think kind of the whole casting of DAO is kind of decentralized, everybody kind of kumbaya. I don't think those are going to be successful use cases. For example, consider a NASA spacecraft. DAO would be a poor fit for designing and building spacecraft, but it could be superb for validating with all the different stakeholders, with all the right documentation and test results, validating that the spacecraft is ready to be launched, right? So the compliance and validation. So those are where I see DAO fits and doesn't. Unfortunately, a lot of the DAO is more like we don't need really corporate headquarters or a boss. We'll just all work it. That's not where I see the fit.
Mhm. Great. Well, we hear a lot about NFTs, non-fungible tokens. There's many applications out there. We mentioned earlier Bored Apes, and there's other examples as well. Andrew, what do you see as the outlook for NFTs? Where do you think that one's going?
Well, I think, the term NFT has taken on a different meaning from its original non-fungible token. Like, it just sounds like Melania Trump selling images, to people. I think what makes more sense to me in this, and I'm not part of the peer group that plays with Barbie dolls, but I respect that Mattel makes a lot of money selling Barbie dolls. What makes more sense to me is when you tie an NFT to some kind of real world good. So an artist, so like at FanVestor, they have a subsidiary, Decentralized Music, that Alex Luke runs. And he was at Napster, an A&R guy before, set up Apple Music, and then set up Amazon Music. He's a serious person. He's seen the industry evolve. He's thinking when an artist comes out with music that the fan is either pre-ordering and buying it, or pre-ordering it and getting an equity slice of future any revenue streams that we're tying to it, that you do have an NFT that is like a governance thing that could be like Carta eShares. I bought the stock, Alan bought the stock, we can verify we're on the cap table, but you also get a vinyl record that they press. So they're shipping a vinyl record and an NFT, and what's the deal agreement with it. To me, that sounds like real tangible stuff. Some of the other ones, I don't know if it makes as much sense to me in a specific metaverse. Allowing fans to have an NFT affiliated with an athlete probably does make sense. It doesn't need to be tied to any kind of pressed vinyl record. But at the end of the day, if people are receiving value, that's good. If I own a very small fractional share of a Lamborghini, is that accretive in value, or do I own part of what is depreciating in value? And do I get my day in the car? That one's a little harder for me to understand. I think that's just like a fanciful, someone's having a good time with it. If you look at Picasso, I think it is, where you have fractional ownership of a timeshare in Lake Tahoe and it just being done with an LLC, that makes more sense than the Lamborghini, example of it.
Great, thanks. And next up is Alan. What do you think is the outlook for NFTs?
Well, if I was Gartner, I would say it's in the trough of disillusionment, right? It's been on the hype curve, but I do see a future for it. And what I see it for is recording digital ownership, digitally recording the ownership of digital property. Okay. A good example, Andrew, you mentioned FanVestor, right? Bowie Music, right? That's David's music is digitally recorded. So though it's not unique, you can copy it. Someone can say, I own this, this set of bits, I own. Just like digital art, right? You can copy it, but who has the rights to it? And it's usage rights. Where I would vary from this is I don't see such a strong use case for showing ownership of a physical entity. Other than in creating the record, it's easier to create it than it is to go to a trusted third-party broker and do all the paper. Yeah, I get that. But the idea of it being digital versus non-digital, it's more of a process thing than anything unique. And here's the challenge.
Alan, can I jump in? I mean, that's what I think is just inevitable. I mean, like, how long have you been investing in startups where you get like a stock certificate in your hand, and then you went to eShares, they changed the name of that company to Carta, and someone's just digitizing that process. If it needs to be on a distributed ledger, blockchain or not, is debatable. Do we need that value? If you're going to become a real estate investor in Nigeria, which sounds like you could make a lot of money, but you want to make sure you don't lose your key or whatever to your wallet. That's where I think ownership does make sense. And we're not just talking about owning the song, which you might have been able to steal on BitTorrent, but getting paid on actual revenue streams related to that song.
Yeah, I'm talking about like the ability to copy. It's really hard to copy a startup and then say, oh, I own this one versus that one. The real problem in the physical world, and you see it with supply chain, is how do you show that physical entity is what you own, right? Is there a serial number on it physically, and then your digital rights goes to that serial number? It's the linkage of the physical to the digital record. So if it's something that in the physical or entity world, like a company is unique, you're right, it's not an issue. And the biggest benefit is there's less paperwork. But if it's, who owns this gun? Who owns something that can be mass produced or faked and counterfeited, right? Is this dress really a designer dress or a knockoff, right? So how do you know which one you really own? That's where I see NFTs for the physical world not going so well. So that's where I draw the line of differentiation. So, but clearly my closing line, digital property is going to grow. We're going to talk about metaverse and other stuff coming up here, and it's going to grow. And if you go with the premise that NFT is going to work for ownership of digital property and digital world grows, then NFTs will grow with it. That's my bottom line. That's why I think
Great.
we're in the trough, but we're going to pick up for adoption slowly.
Mm-hmm.
Very good. And Robert, what's your take on NFTs?
Yeah, you know what? I agree with Dr. Mink. I'm pretty bullish on the future of NFTs. Today we think about NFTs as pixelated cats or monkeys, right? But it truly is going to be much more than that. Like Dr. Mink said, NFTs are proof of ownership for real world assets. It's your property rights on chain. You own the IP to that NFT, for example, and can monetize it, right? So a good example, because it recently happened to me, was I'm on a platform called Snowdrop, and they're kind of a broker in between NFT holders and companies. And there was a company that was looking for a doodle, and so I had my doodle kind of register with them to monetize it, and sure enough, I was selected to partner with a streetwear brand, and they are giving me so it was an 8-week program, and they were giving me 30% royalties on all sales, right? So that's a kind of a cool example today of how NFTs may be used for pixelated cats and monkeys and things like that. But the future is much more bright for NFTs. Buying property is happening today, and for great reason. Like, think about there's a story about a farmer in Venezuela, and he owned hectares of land, and this is a true story. Government officials came to his property and asked to speak with the landowner, and they eventually asked for his title, like a proof of the property, and when he provided to them, they just simply tore it up and said, we own this property now, and asked them to move along, right? So if that was all done on a blockchain, which is essentially just triple entry bookkeeping, in the court system, he could have had a chance to get his land back. It's also being used in North America today, the purchase of property, thanks to companies such as Roofstock. You can complete the purchase of real estate in 15 seconds via an NFT on OpenSea. There's no realtor fees, no lawyer fees. So real estate's a good example of where we'll see NFTs. I think Andrew there mentioned music, right? Platforms such as Sound, I believe it's sound.xyz, are tokenizing songs. So I think Spotify said there was about 7,800 artists globally that are earning over $100,000 a year in music revenue, right? just because the revenue model for artists it sucks, and it's these big companies around the artists that are making all the money, but not the actual artist himself. So companies such as Sound kind of want to flip that revenue model upside down and benefit the artist and the listeners first, right? And I do believe that would make the creation of music more sustainable. And ultimately, the best solution for artists will win in the end. But it's important to remember that most NFT projects hold no utility and no value whatsoever, and will go to zero. There's a lot of scams in the space, so you have to be definitely careful out there. But I am bullish on the future of NFTs, and I think we've just scratched the surface here with with what we see as PFP pictures today.
Great, thanks. We have time for one last topic. We'll talk about the metaverse. We have 3 minutes left, so let's go through and each one give me a 60-second version of what your top takeaways are about the metaverse. Andrew, kick us off with your first 60 seconds there.
Yeah, I think that Mark Zuckerberg's bet is a very risky one, that he can have his company control the metaverse, where I think Microsoft buying Blizzard games with many metaverses that have traction and have built up, daily active users and stuff, that makes a lot of sense to me. And I once heard Brock Pierce say to me, old guy who doesn't understand the metaverse, if you spend a lot of your time playing golf, would you spend a lot of money for an expensive golf club? And the answer, of course, is yes. I have the most expensive golf clubs in the world. Well, if you spent this many hours playing Call of Duty, would you pay money for a gun that gets you through faster, or put your name on the gun for vanity, just like your golf club? And all of a sudden, the old man has a very good understanding that, yeah, if these kids spend more time playing video games than they do watching Netflix or playing golf outdoors, then maybe they do want to invest in a gun. And if they could sell the gun when they're bored of it later, or earn it. So that stuff makes a ton of sense to me. I wouldn't be investing in the Zuckerberg bet.
Okay, great. And Alan, what's your 60-second take on metaverse?
Web3 and metaverse, that's the question, right? The intersection of the two?
That's right.
Okay, otherwise I'd answer differently. I think this could be the best play for Web3 metaverse, and I'll give you why. One is, what's the best use of digital property? It's in a digital world, not the real world. Okay, Andrew talked about a sword or something for a digital game. That's an example. But there's going to be multiple platforms, and you're going to want property to go across them, right? This is decentralization, breakup of the platform. So in the metaverse, you can go across with your property. It doesn't belong to just one platform. So that's another, I think, a huge driver for it. And then the last thing is that the apps that are out there in the metaverse will be able to enforce digital rights that you can't enforce in the real world. Someone can copy an MP3, but you could show ownership and then restrict usage. So digital property becomes even more valuable and more accountable in the metaverse. So I do see a big role for Web3 in the metaverse for those 3 reasons.
Great, thanks. Robert, wrap us up with a 60-second take on metaverse there.
Yeah, I think the metaverse, again, it's at its infancy stage. When I think of the metaverse and how it could benefit us today, I think about maybe the convenience of conducting real world business, right? Meetings done virtually. Pre-COVID era, we conduct meetings by using our cars and maybe flying, right? Now we're on Zoom, right? And we have the convenience of meeting and conducting business, on programs such as Zoom. But in the future, I do envision a world where we're putting on, VR headsets, connecting to our online workplace and conducting business internally with the colleagues, as well as externally with different people around the world. So I think that could be a use case. Gaming is going to be a big one. A lot of people in third world countries can play to earn. that's income for their families. In North America, that might be considered, passive income or hobby income, but because if you participate in these games, it really is play to earn. It's going to evolve to maybe play and earn as the games get superior and kind of more fun to play. But they are virtual online worlds with economies, and there's going to be big companies that are competing in the space. Build a game that's fun and monetize around it.
Sounds good.
Yeah.
We appreciate that. We're at the end of our time. I want to thank all of our panelists for their time, wisdom, and experience. Great discussion today. It's an early stage market. There's a lot of things going on. Saw a great set of perspectives today. Appreciate you guys sharing that with us. With that, we'll go and close out the panel, and we'll pass this back over to the Kiwi Tech team. Thank you guys so much.
Thank you. Bye, everybody.